Hey, good afternoon. This is Julie, and it is Friday. Yay! July 13th, 2:18 p.m. Going to take a look real quick at the markets this past week and what to look ahead for next week. And I hope this may help put some pieces to the puzzle together for you as far as trading is concerned. So let's first look at the calendar. Um, on Tuesday of this week, July 10th, we started the numbers out with a pretty good print on employment. The JOLTS job openings came in 6.638 million, which is really interesting. JOLTS is the number of jobs that are available. The unemployment, the non-farm payroll report that came in at the beginning of the month indicated that there are 6 million people looking for work. 6.6. Um, is that, no, 6.3 or something like that, but it's underneath this number. So again, we have more jobs opens, more available positions than we have the number of people currently looking for work. But that's a little bit deceptive because this last employment report showed that a lot of people have left their crappy jobs to find a better job, which is excellent for the economy. So finally, we're at a place where if you don't like what you're doing, tell the boss to go, shove it and go find another job. So that's the way we want it to be, and everybody to be happy doing what they like to do and enjoying their work, hopefully. And so the economy is doing really good. We had low inflation this week. The PPI came out. The producer prices ticked up just a little bit, a smidge up on what the PPI is. So that was a little bit inflationary, but it was offset the following day with no CPI, the personal income. Um, Inflation was non-existent. Crude oil inventories on Wednesday, we'll look at crude, also these charts. You would have thought that this huge draw of 12.6 million barrels would have, you know, caused a little rally in crude. Well, it tanked on this news. So what happened was earlier in the day, OPEC came out with its production report saying that there was not going to be enough demand in 2019 for energy products as there was in 2018. So the market sold off despite this great draw. And the markets are overheated anyway. As we know, the president spoke to the Saudi prince and they've agreed to um, production cuts or production cuts. So increase production. I mean, not cuts. Excuse me, I've got that backwards. Increase production so that that would lower the price. I think I got that right. And here's our CPI numbers that came out showing that the inflation for personal expenditures is still um, minimal, so or in line with expectations. So it's again great economic numbers. And on Friday, today, Friday the 13th, we had good export price and bad. So the numbers were mixed on the import exports. The trade balance, oh, that's not ours. That's somebody else's. Sorry. The Indian trade balance, no. Import price index, but the consumer expectation number, the current conditions 113.9 is good and a little bit off on the expectations. So a little bit mixed report on the consumer confidence. And next week we get our earnings season in full gear starting for the next 2 weeks. And we have some big numbers coming out next week. Retail sales on Monday. So make sure that you're in the trade room early at 7:30. Trade those retail sales numbers. Um, Business inventories also. On Tuesday, we've got some Fed chairman speaking to the Senate and the House, Congress. So he's going to be jawboning. So that's going to be kind of bad for trading because you never know if the market can go, askew about something that they said in one of those meetings. Wednesday is real estate day, crude oil inventories. Thursday, Philadelphia Fed manufacturing. Friday, nothing. And what I wanted to really skip to is the Friday, the big day is the July 27th. Make sure you keep your powder dry for July 27th. Mark that on your calendar and start dreaming about it, because this is where we get our GDP second quarter print, our first cut of that print, and we're expecting 4%. Look at that. So we might miss actually 3.8, 3.6, something like that. But, it would still be awesome. 2% is where we're currently at, so which is great. Anything over 2, 3, 4, I mean, come on. The market, is going to rally on this first print. Make no mistake, especially if we have good earnings. We had mixed earnings out today in the banks, but and the market was up and down today too, but we had other news that came out. There's been a lot in the macro events as far as news. So let's take a quick look at the charts. The euro on the weekly was down. There is some up momentum on that weekly. So I would expect this to sort of fluctuate if it unless it clears these lows. Um, it's going to get bouncy down here next week, um, going into that earnings season as well as the GDP print. Nothing's really going to happen until that GDP print for the euro. On the daily, we had an update today, and here was the 60-minute chart showing this upward move that came into the market, reversion to the mean, retracement. But overall, as you can see, the downtrending pattern. But today we came back to the prior close. So we ended flat, traded up. So there was really no trend condition to trade in the euro today. It was a non-tradable market, and you can see on the market analyzer how mixed it is and flat. So when you see something that's red, green, red, green, red, green like this, just stay away from that market because it's not a trending condition market. So let me put this on a link. Let's go down to crude. Crude again, up and down today. It changed up. Net change was up today, 0.63%, but we're in another mixed condition, up and down, red, green, red, green. And that's what happened today. We had, let's start back with the weekly. You can see that the week is closing down. This looks like one of those reversal candle type things going on. So I would be looking for, price to continue down towards that 200 EMA, 68. We've got the first reversal back on the momentum on the weekly. On the daily, it was a mixed day. We are trading inside the open and close of yesterday, and I thought we were going to rally up a little bit higher than they got. They got 72, just under 72, and it stalled. It never really got back up to the support area, resistance at 72.27. It sort of stalled out underneath it. There's still time left. It's 2:30, but I think for all intents and purposes, this is over. So for Monday, you might expect to see that 72.27 area gets checked, and then it would come back down, perhaps. We'll have to wait and see, and also see how that next EIA report comes out. 14 million barrels last week. Good Lord. The ES, you know, Goldman Sachs is raising its forecast. They're expecting 2850 for 2018 now, and I'm thinking 3000. And 2950, I think they said 2950, not 2829 is what they're looking for. But you know, if you're going to get 2950, you're going to get 3000 by the end of the year, right? You should. So we are definitely moving up into this earnings season. Upward momentum on the weekly. Today, that was a little bit of a down day, um, below the closes and the prior high. Um, just a little bit of a resting, but we're sitting on our highs on the daily. So forward momentum for next week. And a lot will be, again, on these earnings. 60-minute today. You can see we just had a tough time of it, that very low momentum. 15-minute, let me take a look at this 15-minute chart. Why my charts are doing that all of a sudden. Here we go, just a very tough day of it. Here was yesterday's great move up. And here are the alls and the ones. Great move up. And today we retraced in a little bit back to the pivot points and flattened out. So we're holding the highs and consolidating. Just depends. There's no data on Monday, really. Wait, there is data on Monday. Retail sales. Come back up here. Yes, retail sales. So we will have, and New York Empire Manufacturing. So we will have data to trade Monday. So that'll be good. We might be able to kick this up and out, getting into those earnings on that retail sales number. And the numbers have been very strong. The NASDAQ, the market that we trade the most, if not exclusively, also looks like it's maybe setting up for a reversal up here. Let's take a look at the weekly. Strong upward trend. When I said reversal, we had a new all-time high yesterday. So we're just trading flat sideways off of that all-time high. We're still holding our highs. Just fantastic, fantastic move yesterday in the market, in the indexes, and very strong, just sideways, holding this high area. That's all. Go back to the daily. So big, strong bull bar, pushed out of this area. Very, very big sign of strength. Holding just a little bit. So I'm not sure if we're going to come back in and test this area here. That's why I put it on the chart just in case. And that may be a second launching area for the trend up, or if it's just going to continue pushing up. We'll have to wait, of course, for those retail sales numbers. But overall, a very, very strong market. 60-minute, same picture, really. This is what we want to see when we're going outside for a trend, outside the range. And so when you see flattened sideways, you just sit on your hands and not take it. Today we had a bit, there was that news that came out today on the Russian indictments, and that put the Casbah on the trend up. We had a V bottom on the 3 minute, and so we were able to wait for this pullback. When you get a V bottom, wait for the pullback, and then as soon as you get the breakout, that's what you trade, and that's what we were doing. So we got a good push off of that. We're able to take it up to the pivot point. Excuse me, the Fibonacci, and this was the fib from the low to the high, pullback, and that was the target right there. We had noted the volatility level was sitting right there on top of the fib level and blocking the targets of the prior day close and low. So we had this huge volatility level holding price. And then right here, I think, change this, right here, the news event came out on that indictment, and you could see the market flushed. And then as soon as he started talking quickly, and the market realized that it was nothing affecting the U.S. markets, and we went ahead and retested and then rolled over. And then I think just like the E-mini, the markets flushed, went back to the 50% line of that V bottom, and is continuing back up. So it looks like we're going to close high today, maybe break the fib line. The market's still moving, and as you can see, we are now, you've got your trade permissive. So if you're trading the alls like we like to do in the trade room, we'd be perking up right here and right now, and especially since we are clearing our volatility level on really the first push, good strong bullish sign. So this is where you'd want to be actively engaging the market on the lower time frame, and that looks like this right here. Let me pull the chart over. And this is a big push, and big push, not even back to the triggers yet. Hasn't even pulled back to the triggers to give us a signal. Just a big push up. So we would want to take each time you get a pullback into the trigger and pick a trade. And here's your target, first target. And again, I had some other targets on the other chart that aren't marked. 7403 right there, and then 7408 and 10. And you would just trade that up if you wanted to try to get to those closes. Sometimes trading that afternoon, last 15 minutes of the trading session can be good in the indexes if it's moving, and it looks like it's starting to move right now in the last 5 or 6 minutes. Push up. The Russell was flat this week. It didn't really participate in that rally yesterday, stayed compressed inside of its range, and it's doing that V bottom on the daily though. So here's your V, and here's that pullback. So once we break out of this range, it's probably going to start exploding. So wait for the Russell to turn all green next week on those earnings, and wait for your bear flag or your line to break right there. So as soon as you get over 1700, I'd be paying attention to everything green on my screen at that time. So we want to get above this and above 1700, and then watch that take off. YM had some really good price action this week, but again, it looks more reminiscent of the E-mini. Did not get, of course, the NASDAQ is the leader out of its range, and we are at the top again of the Keltner, so we want it to break above this level here. But do you see how flat this is? This is just flatter than a pancake. So it could come back down to the mid band again and then take off. So be careful for a breakout, fake out, and then run, because of the flatness of this slope. And you're going to have people sitting here with their stops. So once it hits that line, at the high here, it's going to run those stops so that you may think that you're getting a breakout. And when that stop run exhausts after, you popped all of those stops, then that exhaustion allows that failure to come back. And once that failure picks up steam, then they start pile driving it because they know where to go. They're going back for that middle line. I'm just saying, if that happens, don't think that you're, going to keep moving to the downside. That ain't going to happen, unless they go for a stop run, which would be a big shocker. Go back and pick up all these stops and then take it back up. So you never know what's going to happen. This is a very small range comparatively, and anything can happen because of the flatness. So we just, keep our eye on the ball and just trade small. We want to see a slope on, a good slope like this on the 60-minute chart, to be taking those with trend conditions. And that looks like, I don't know if we'll even find it. This has been such a flat market. Something like this, but extended, not choppy, very extended. Okay. And that's about all I have for us. It's going to be some great trading for the next couple of weeks, really to the end of the month. It's a great time to be trading. So get some sleep, get some rest, review your charts, and leave some powder dry, seriously, for the end of the month on that GDP print, because that's when everything can go bananas, for a big win, or a big loss. I mean, because they're projecting 4%, I keep my eye on that Atlanta Fed GDP number that they post, and I have been watching it go down, 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 down. Let me show you that. There's a website on the federalbankofatlanta.org. It's called GDP Now Q2, and this is their July 11th estimation, and it keeps pushing down. At first, as you see, we were at 4.5%, really at 4.8%, and they keep lowering it. Here's the blue chip consensus right in the middle line, and now we're below blue chip. So here's that 3.5 range. So we're below the consensus for the end of the month, and they've already printed that 4%. So right now we're on target to miss that number. So I don't know how the market's going to respond to that. Just keep your eye on this website going into that number, and anything can happen. It could be higher, it could be lower, but seriously, at the low end of this range is 3%. We haven't hit 3%. When is the last time we've hit 3% GDP? I mean, it's going to be a great number. Here we are way down here at 2, and we're, certainly going to be much better than 2, but not as good as initially thought at this upper end of the range. I would think that we're going to be somewhere real close to 4, 3.8, like they've got it now, something like that. The numbers that have been coming out have been too good. So, and this may continue rising a little bit. It may even get above 4 at the time of the print, their estimate. So we'll just have to wait and see. I would love to see a 4 in front of that number on the end of the month, but I'll take anything between these two numbers. It's going to be awesome. All right, guys, y'all have a great weekend. There's going to be, like I said, a big slew of trading opportunities in the next couple of weeks, so get some rest. Talk to you soon.